USH will play a major role in helping reduce selling pressure on EGLD. All the revenue of USH will be redistributed in the staking module. All stablecoins that are not MiCA compliant may be delisted from all sexes in the European market. What's next is maybe even more exciting than what we already released. This is like something that an alpha, but we're like working on
Welcome back to another Beyond the Basics, and I've got Ahmed, the CEO and co-founder of Hatom Labs, joining me today, talking about some of the upcoming stuff that they have, which is quite a lot. Primarily, we're going to talk about USH and the new decentralized stablecoin that is coming out in just about, what are we looking at, about 5 days?
Yeah, not much time left actually.
So have you gotten any sleep in the past week or two even?
I would say that the whole team is going through a pretty exhaustive sprint. So trying to get ready, make sure that everything is settled in time, but we'll be able to take some rest a bit later, I would say, in the upcoming weeks.
Hopefully. Yeah, it seems like you guys have been going crazy and getting ready for this big launch, which is a huge launch too, a stable coin. So I appreciate you coming on to talk about it and giving the community some insight.
No, my pleasure, David. Thank you for inviting me.
Yeah, glad to have you. So start off and let's go over a little bit about your background and how you got into the Web3 space and Hatom Labs. How does it all kind of fit together?
All right. So to give a bit more background about myself, I have a business administration degree and a master's in finance. I've been an entrepreneur at heart since a very young age. I think I've done it all. At 14, I was importing goods from China and Europe, trying to resell them locally. I even built some businesses inside like video games, trying to generate some real profits. After finishing my studies, I briefly worked as a financial analyst, but quickly transitioned to managing several businesses, mostly in real estate and the educational sector. So I've always been quite versatile. And for me, the industry itself wasn't the most important thing. What I enjoyed most was the entire process behind running a company, identifying problems, solving them, setting goals, and executing strategies to build something successful and profitable. So all along this time, and since my teenage years, I've been deeply involved in crypto, and I experienced the very first crypto cycles. I was initially an investor, and later become a trader and a DeFi user when protocols compound on ETHLand. So before they become Aave, when they emerged. So afterward, I came across Elrond. I was impressed by the approach of the team, being the first fully charted chain with a real solution for scaling. I was also impressed by their approach and the metrics that they were achieving actually after launching the Meyer exchange. And at that point, I was still an investor, but this is when my journey as a builder began. So the financial sector is a core pillar of any blockchain. And I saw that MultiversX was missing some key DeFi components. So that's when I decided to transition from investor to builder to contribute to the ecosystem, but from the inside. That's how we decided to build on MultiversX and why we started with the lending protocol, actually, because it's a fundamental component for any thriving blockchain economy. So first step was gathering a team of like-minded people, and we started working on our initial proof of concept. So one thing led to another, and after more than 3 years of development now, we have more than 2 million EGLD that is stacked and supplied across our protocols, which represent like 7.2% of the total circulating supply of EGLD.
Wow.
And after the lending protocol, we ended up building a liquid staking solution, a booster module, a bridge connecting BitTransfer to MultiversX, a liquid staking solution for Tau, and our next upcoming product like USH, the first decentralized, over-collateralized stablecoin native to MultiversX. So I think like resumes a bit, I would say, like background and how we ended up here.
Wow. Yeah, a lot going on, obviously. It's crazy to think that it's already been 3 years too. How time moves in the Web3 is fascinating. Yeah, you guys built the number one lending borrowing platform, and that has, I think, something like 70 to 80% of the TVL at this point too, right?
Oh, the DeFi TVL, yes.
Yes.
So
Awesome.
It's a pretty good metric ratio between the market cap of the chain and the TVL of our products, but we have like a pretty big team who are like all quite competent, and we spend like a lot of time actually working on our go-to-market strategy before like in any product. So this is like a really important step during our process when we build something.
Yeah, sure. And I think I heard you guys spent anywhere between $3 to $4 million on audits, which
Exactly.
is crazy, but it's also necessary in a space that has so many issues and hacks. Just a week ago, we saw the biggest hack in history, $1.5 billion hacked from Bybit. So it's something that I feel is glossed over so much in the Web3 space. And there's probably a lot of protocols that don't have any audits at all, which is a shame. And you guys take it to the other extreme, which is it's great to see.
For us, let's say that the security aspect is one of the most important during our process of building products and before like shipping them. So we never release any product before we make sure that it is like very secure and it has been like audited like multiple at least. So like inside the process, what we do first is we have, you see, like an internal audit, which means that after developing, I would say, like each contract of the different products, all our senior developers are reviewing the work of the other team members, which means that they are like performing an initial like first, and then afterward, what we do is we are like working with different like auditors, basically. So for us, like we invested quite a huge amount on the audit process because we have like a responsibility. We are like managing really big amount of funds from users for the ecosystem too, and it is a necessity to make sure that the protocol is as secure as possible. And in terms of auditors, so we worked with the most like reputable from the space. So we worked with Ransom Verification, ABDK Consulting, Hacken, Certic, Big Shield, Arda.
Awesome. Yeah, I wish there was more of the standard in the space. Unfortunately, it's not. So it's great to see how much emphasis you guys place on security. Let's dive into the big topic that's coming up in just a few days, USH, this first decentralized, over-collateralized stablecoin. And this is a huge launch, especially with stablecoins being the big talk of the day and the big talk of the year and previous years even, because we have all these centralized stablecoins that are being looked at pretty harshly right now. And then if you go back a couple of years, we've got UST that gave the market a big scare, and people had issues trusting decentralized stablecoins for a while. So tell us about your whole process with designing USH and what made you want to jump into this stablecoin market.
Sure. So what's really important to point out is the difference like between the models of stablecoins. So USH is totally different from UST. So we are an over collateralized stablecoins that could be compared, for example, to the DAI token or to the HO token. Those are some of the models that withstood the test of time and proved that they are secure, reliable, and pretty like stable. So for us, I would say that during our process of maintaining the protocol on mainnet, I'm referring to the lending protocol, what we noticed is that there was a need for stablecoin liquidity. What happened is that whenever some liquidity in USDC or USDT was supplied in the lending protocol, it was directly borrowed by different users. It created some high yields on both the supply and the borrow side, but even though there has always been people who were ready to be exposed to those high yields for the sake of being able to access the stablecoin liquidity. And at the same time, there was a lack of new liquidity being bridged and supplied on MultiversX, even if the yields were 2 or 3 times higher than what you can find anywhere else on this place. And they were generated in a pretty organic way. So generated from the APYs that the borrowers were paying. So this is where we understood that there was a need for stablecoin liquidity to allow people to be able to access this liquidity without any constraint and at some, I would say, like reasonable and stable yields. So when you are basically minting USH, you will have the possibility to either like mint it at a 0% APY through the isolated pool, or at a fixed rate through the lending protocol, allowing users to have like more flexibility without worrying about the available liquidity on chain. And besides this, I would say besides trying to solve stable liquidity issues, USH is also playing or will play a major role in helping reduce selling pressure on eGold through the approach of allowing liquidity pairs to be formed with USH instead of being formed with eGold. And this is the exact same transition that Ethereum went through at the beginning, where all pairs were paired with ETH and then transitioned to being paired with stablecoins. It will also allow reducing the selling pressure on eGold by allowing people to not sell it directly, but just use it as collateral to be able to access a stablecoin liquidity too. Additionally, it will also offer some new yield opportunities, create more activity, more metrics for the different applications, dexes, arbitrage opportunities, and so on. So I would say like this is why we started building it initially.
Awesome. You mentioned the impact it had when Ethereum first started introducing the stable coins, and then they could bond it with Ethereum or with the stable coin instead of Ethereum. What type of impact did that have on the ecosystem?
So what it had is it prevented basically or helped reduce from the selling pressure. So on ETH at the time. So even right now on MultiversX, what we have is all LPs are paired with eGold, which means that whenever a token or any ASDT wants to access liquidity, it is sold against eGold. So pushing eGold down each time. And in addition to that, even for eGold, it links to those LPs with the price of eGold, basically. So if the USDTs are going up, eGold can go up too. But if they are going down, it brings eGold down also. So USH provide an alternative for this approach. So instead of having all the pairs paired with eGold, they could be paired with USH, a stable coin. So those tokens and eGold will have an independent price market, and at the same time will help from reducing, you see, like the same pressure that was applied on eGold itself through those implementations.
Awesome. And where do you see that going with the launch of USH and with all the new mechanics and things that people can do with it?
I would say that the use cases will differ like from one user to the other, but there could be like multiple opportunities and possibilities on how this liquidity could be used. So users will be able to use basically like their assets in the isolated pool to be able to mint USH at 0% if they want to long it, or if they want to create like some complex DeFi strategies, they could apply any collateral on the lending protocol and mint USH at a fixed rate for the same reason. I would say like the most profitable like use cases will be to take advantage of the staking module that will be deployed with the launch of USH. So the staking module, as it names refers to, is a staking smart contract where users will be able to stake LP tokens related with USH. So upon staking, those users will start earning a portion of the revenue that USH is generating through different products. So all the revenue of USH will be redistributed in the staking module, but proportionally on the different LPs that will be integrated. So staking of the LPs for USH eGold, USH USDC, USH USDT, USH MEX, Foxy, Ash, and HCM will be made available. And for users, it will be like a new yield opportunity that they can access to because they earn the trading rewards and any additional rewards distributed by the DEX, so either AshSwap or XEchange. And in addition to that, they will earn from the revenue of USH, which could be like even higher than what they were earning like initially through the LP itself.
Yeah, there's lots of ways to earn and utilize the platform. One of my favorites that I'm really interested in is the isolated pools that you mentioned, where you could take out a 0% loan and then use that USH for whatever various use cases. And I've seen some strategies where people are then buying EGLD and looping and doing all that. You guys have a great group of DeFi educators too that have been putting out some solid content, and I imagine there's going to be a lot more coming this week to help educate people on the strategies and the potential risks of liquidation and stuff that come along with all this stuff.
I can only agree with what you said. So the guys are doing a really great job in terms of providing content for the community, because the goal on our side is to make sure that everyone understands the potential of USH, how it works, and what opportunities it will be unlocking, and how best they could take advantage of them. So trying to make it easier for people, for users, is really important for us, actually. And we will always keep on providing educational content, tutorials, and trying to simplify the understanding of our different products.
Awesome. Yeah, I think that's such a huge part of it, because DeFi can get kind of complicated. And as Web3 progresses, we see all these tools that are making it even easier to use, which sometimes can be a double-edged sword. Because if you don't understand what you're doing, you could get yourself in a world of hurt if you're just sometimes with these one-click LP pools or whatever. If you don't understand what's going on, it could backfire on you. So it's great to see all the content around it. One thing I want to dive into is all the security mechanisms you guys have you put in place. And I think it really shows how sometimes not being the first really has some major advantages, because you guys have learned from UST and Aave and all these other protocols, the lending and borrowing and stablecoins, on almost what not to do and then how to perfect the system. So let's dive into a little bit of the security mechanisms that you guys have in place to help protect users and the ecosystem.
Sure. So in our case, when we decided to start working on the stablecoin, we needed to make sure that we are covering the different aspects of it, defining the model that we wanted to follow too. So in our case, we got inspired by different over collateralized models, such as DAI or RO of Aave, which have withstood the test of time. So we revisited them, explored the issues that they faced in the past, and tried to come up with what we believe is a strong and complete implementation of a decentralized stablecoin. So in terms of the peg protection, so multiple mechanisms play a major role in the process. So there is what we refer to as the soft protection mechanism, which is the role that arbitrageurs play. For example, when USH start trading below peg. So those actors rebalance the price of USH between the different LPs while looking for arbitrage profits to make along the way. In addition to that, USH is also always considered to have a price of $1 on both the isolated and the lending protocols. And this incentivizes users to buy it from the open market whenever they see it trading below $1, allowing them to repay their loans at a discount, while at the same time helping maintain USH price stability. There are also some more advanced users who have put in place some complex strategies to buy USH from the open market when it is trading below $1, because they know that its value is protected by the over collateralization mechanism and that it will always regain its peg. So they buy and hold USH, waiting for prices to stabilize. And I would say that this confidence you see from the different actors comes from the fact that we also have a hard peg protection mechanism that is implemented. And this is what safeguards the peg in any given scenario. It is the key factor that gives users confidence to buy USH in case of a deep peg on DEXs, knowing that it is fully backed by its collaterals. So stablecoins like DAI and LUSD use similar redemption mechanism because they are the most effective ones. Arbitrageurs step in when they know everything is backed. So most of the peg stability will naturally come from them. So this is what we've seen with all stablecoins that have successfully stood the test of time. And on our side, to push for adoptions, stability, and provide real utility for USH from day one. We've also developed the staking module. So this allows users to create LPs for USH, which is strengthening its liquidity while earning additional yields. So both from the LP itself and from the revenue generated by USH. And if you take the RO token as an example, like the stablecoin of Aave, they launched without a redemption mechanism, and they remained like depegged for months until they introduced a staking module on their safety module, which allowed users to earn yields and encouraged actually people to buy it. So USH, on the other hand, will not only have staking available from day one, but it will also have a redemption mechanism to ensure it never trades below peg under any circumstances.
Oh, that's such a great security mechanism too. And the fact that it's also going to open up a lot of arbitrage opportunities, which is going to bring more activity to the chain, which is great. And it's all decentralized. So it's all run by smart contracts, which is great. You're trusting code and not someone else to mint tokens and send them to you like some of these other stablecoins that are completely centralized. And you have, I think there's some security mechanisms built into the smart contract as well that can take actions if something were to happen, correct?
So I would say it is not something related to USH, but more to lending. How USH works, it has liquidations implemented too. It means that if your collateral decreases in value, at some point, like you will be eligible to get liquidated. But we don't have something that will stop liquidation from happening or redemptions too. On the lending protocol, what could happen is if the prices between the DEX and the exchanges are too different from each other's, some transactions are not going through until both prices fall inside the same range. And this assures us that both the price on the DEX, the same price that we are using, and the price on the CEXes are close to each other, and there has been like no manipulation on either side, basically.
So it protects from stuff like that and crazy activities on if we see a spike on one of the primary DEXs and it's unnatural.
Exactly, yes. This is the main case, actually. So when spikes happen, you see like the price needs to be updated everywhere on all platforms, on all exchanges, not only on the DEX, because arbitrage will take place. If arbitrage is not happening, it means that there is an issue, either on the DEX or on the CEXes. So we shouldn't like allow transactions at that moment.
Makes sense. I think we had an incident not too long ago, maybe in the past few months, where Bitcoin crashed to something like 16,000 on either Kraken or crypto.com, and it just had a quick leg down and back up. And I think it caused a couple issues across the ecosystem because they didn't have security mechanisms in place like that, where they're taking the price from so many different places.
I agree. It's avoid having to go through some of those scenarios. Something additional that we have implemented that prevents like such cases is how we fetch the price for EGLD, our liquid staking derivative token, and how we use it on the lending protocol. So some lending protocols, what they do is that they fetch the price directly from the DEXs, from the LP itself, and use that as a reference in the lending protocol. But what happens is that when that LP gets unbalanced, meaning there has been a huge amount of LSD token that has been sold, the price decreases, even though those LSDs are backed by real assets that are stacked in, the smart contract at liquid staking. So this could result in liquidations. In our case, on Hatom, what we do is we fetch the price of the EGLD directly from the liquid staking smart contract, because we know that the price is actually like backed by the liquidity that is stacked in that smart contract. And at any point in time, you can unstake it and receive it after the unstaking period. So it won't make sense for us to just use the price of the DEX LP, because if it gets unbalanced, it will trigger a cascade of liquidations, actually. Well, the asset is secure in a way.
And you had mentioned it too. I think it's worth mentioning again, the fact that it not only is it over collateralized, but it's also backed by a basket of assets. So it's not just EGLD or Ethereum or Bitcoin, which can be very volatile and lead to potential liquidations. It's also, you're able to use USDC, USDT for collateral to help keep the price a lot more stable and avoid the crazy volatility that we see in the market.
Yes. So for USH, it is a model that accepts, as you described, you see like a basket of assets to be used like as collateral. So on the isolated pool, you could use either EGLD or Raptao to be able to mint USH at 0%. And on the lending protocol, you could use any of the other integrated assets. So from USDC, USDT, UTK2, HEM, MEX to be able to mint it at fixed borrowing APR. So there are multiple assets that are like back in USH actually.
Awesome. While we're still on the stablecoin too, I'd like to touch a little bit on the regulations and everything that's been coming down the pipeline, and wondering what type of hoops you guys have had to jump through, or what you were possibly see in the future coming with all this. And just yesterday, I was in a conversation with some people about whether or not we will ever see a decentralized stablecoin that could be a top 10 or top 20 of the in the market. So right now, the two dominant players are entirely centralized. They can freeze, wipe, remove, and I think a lot of people don't realize that. So there's a major need for a decentralized stablecoin.
I totally agree with you. I would say that my take on this is, you see, like from a regulation point of view, it's definitely a tricky area to navigate. So recently, what we've seen is that all stablecoins that are not MiCA compliant may be delisted from all sexes in the European market. Like even Coinbase delisted DAI, even though it offers a decentralized model. But the good thing is that you will always be able to use DAI on chain. You see, like, because it's decentralized actually. Personally, I don't think that this will hinder the development of decentralized stablecoins. And with the recent election of Trump and seeing the direction they are taking, I don't think that overall they will decide to go after decentralized stablecoins or decentralized protocols in general. What could happen is that regulations could be made in place to make sure that the protocols or the products are truly decentralized. And I would say that on our side, so once these regulations are clearly established, we'll have the visibility needed to comply with them, provided the terms are reasonable, of course. But that said, I don't believe, you see, like any country can simplify decentralization. They could try, but I don't think they will succeed at the end.
Yeah, it seems like we're getting to that point where it might come to it, but like you said, whether or not they can, it's hard, because if it's decentralized, what can you really do? And just trying to take down Bitcoin. Luck. Let's also kind of go into, you have another token with Hatom Protocol, the HTM token.
Yes.
And this also plays into the platform as well. I know a question that I see come up often is how the HTM token kind of benefits from this entire advancement of the USH and the protocol that's becoming much larger.
Sure. So what I can start by saying is that the HTM token has been put at the heart of the whole ecosystem, actually. So it's not only a governance token, but a utility token. What we did right after we went live with the lending protocol and the liquid staking on mainnet, we started working on the booster. So the booster implementation is a sort of fee switch model where the revenue of the protocol is redistributed to token holders. So we had the idea before, and what we added is an implementation where token holders needs also to be platform users for them to be able to claim a portion of our revenue. So the HTM token is what unlocks the access to the revenue that the protocol is generating, actually. And with the release of USH, we will have the release of the booster V2. So the V2 of our initial implementation, where this time there is no limit in terms of how you can boost your position. So the bigger your position in the protocol and the more assets or the more HTM tokens you are staking, the higher the percentage from the revenue of the protocol you can take. So like HTM will benefit directly from both products because we will have additional revenue that will be generated, redistributed to users, again, through lending and the staking module. But for them to be able to take advantage of them, they will need to be token holders to participate in providing liquidity too.
Got it. And the HTM token has done really well of late. I think it's pulled a 2x, maybe even more in the past just couple weeks. So definitely a lot of interest in that, and probably tied to the USH launch that's right around the corner, as well as you mentioned Booster V2, which opens up more possibilities for token holders and the entire platform. I know you guys have the token launching in about 4 or 5 days. And you say things will probably slow down afterwards, but I'm sure they won't. You guys have lots of stuff in the back burner, lots of stuff you're always working on. So what is next for you guys?
Well, what's next is maybe even more exciting than what we already released up to now. So something that we've been like working on for more than 2 months now. Actually, times passes so quick. So we have like a full team dedicated to perform like our R&D on a new product that we aim to release. So this new product is called USH Proxy. We already like just did explained a bit what it does on our different like protocol updates, and we believe that this could be a revolutionary product because the approach doesn't exist anywhere else, and it will allow Hatom to deploy something like completely new and innovative on MultiversX and use this new product as a mean to be able to start our cross-chain expansion and actually be able to take a big portion of the market wherever we deploy. So without like going too much into the details, USH proxy is, or let's say we can start like by defining the problem. When you take a look at the different lending protocols, whether it is on Ethereum, Solana, MultiversX, anywhere, you will see that the money markets of the liquid stake tokens is the one with the most liquidity, but also the one that is the less efficient. When I say less efficient, it means that this liquidity is just used as collateral to be able to take out loans, but this liquidity doesn't generate any revenue for the protocol because no one is borrowing those assets as they increase in value or there aren't much use cases for them. If you take a look at Aave, you would see that nearly $3.2 billion is supplied like STETH, and they have like borrow APY of something around like 0.4%. So USH proxy comes with the goal of performing a delta neutral strategy using that unused liquidity to be able to generate like some yields for them. So for those assets, those yields will allow us to bootstrap the different money markets, increasing the yields that we are offering. And this will be, I believe, like one of our most exciting products that will allow us to start the cross-chain expansion, but also attract some new liquidity and some new users on MultiversX too. And of course, you see like with this additional revenue that will be like generating through this additional liquidity and so on, people will also need to be able to boost like your positions with the booster. So at the end, like the HM token will always remain, you see, at the heart of the whole ecosystem and any product that we are building. So yeah, I really believe that we are like early in the development phase, and we are like looking forward to what will be coming.
Very cool. And I'd say the entire space is still early, in fact. So there's still so much to come, and it's exciting to see all that you guys are building, especially with cross-chain and interoperability. It's going to be one of the main narratives, I think, for 2025 and maybe even beyond, because we have so much isolation going on in this space. So many great projects and chains that are just their own islands right now, and not a great way to interact with all of them. So it's great to see that you're looking towards that. And I imagine, so is USH going to be multi-chain as well?
Our goal, I would say, is like a short-term goal is to deploy USH, make it stable, be in liquid, and make sure that it is adopted on MultiversX. And then as a second step, once we start our cross-chain expansion, USH will also be deployed on any new chain.
Awesome. Very cool. So what do you think could be the number one thing for MultiversX and the community and everyone involved in it to really help push things in a better direction and really start building that TVL? If you can give kind of just one piece of advice for everyone with the coming launches and everything you guys have in place.
The most simple advice that I give, like be active. Try to learn, see what is like available, what are like the opportunities, like take time to understand what you can do, to understand what is not clear for you, because people just need to take time to be able to take advantage of them. You see, like a lot of people are holding EGLD actually or other assets, but just like keeping them in their wallets while they come. You see, like some active members of the community, and each one could advance at his own pace. You see, there are like strategies or opportunities for different users. The ones that are looking for some steady yields and small ones, others who are looking for some high reward yields out to perform those risky strategies. So yeah, I would say like be active.
Awesome. Yeah, there's so many opportunities, and definitely the education aspect is probably, I'd say, number one. And then also educating those that are not involved in the space, because what DeFi offers is it's massive. And I don't think it's fully understood, because right now we're all just, a lot of people are just putting their money on the bank, and the bank's making all the money off of it by doing a lot of the stuff that DeFi offers. And while it can seem confusing, it's certainly worth learning and diving in. Like you said, there's so many different levels people can take, from just the most basic staking to looping to lending and borrowing. So many opportunities. So, and I know you guys are going to have a lot of content and stuff coming around that with education, which is great.
Yeah. A lot of threads, tutorials, videos like will be constantly like published, posted. In addition to that, like we're always available on our Telegram channels, on X too. So if someone needs some help, if something like is not clear, they can be sure that there will always be someone to assist them on the different channels that we have. We also have like intercom like implemented directly on our website, so you are able to discuss with someone and receive like some instant help actually without like having to own Telegram or a Telegram account.
Yeah. So what are if people want to go ahead and follow you and learn more, what would be the steps you'd recommend? First, definitely go ahead and follow Ahmed. I'll go ahead and share his Twitter account, and you'll have to check out the website. The website, I should also mention, has won multiple awards at this time, or at least the various websites you guys have done. They're kind of fun. It's like playing a video game almost, interacting with your websites. So definitely check out the website. But where can people go to learn more?
So no, thanks a lot. Like first for the kind words. We try to create like a whole experience for the website where we explain like the story of Hatom, how it started, at which step we are right now, and then what's coming next. So it's a whole story that we try to tell in a pretty like interactive way. And this is like something that like an alpha, but we are like working on a complete like redesign. This is like already in the work. We had like multiple calls actually with between like our designers and between like different members and users like of the communities to try like to get their feedback and try to implement them too. So yeah, like looking forward to it. Actually, like I can't wait on my side.
And this is a redesign of the website, the protocol. What are we talking about here?
So not the website, but the applications actually.
Wow. Okay. Very cool. It's already one of the most clean and user-friendly lending and borrowing sites. Probably actually the number one I've used. So it's already a great tool. So I'm really curious to see what you guys have coming with the next launch.
I think that you'll like it even more. It will come soon. We don't have like any date yet, but we are doing our best to have it like live as soon as possible. So yeah, and for following us, I would say that following like our X account will be like the first thing that you need to do, because there we make sure to always include like the most important updates about the protocol, the news, updates about like our roadmap and what you are working on. And then the second thing you could do is join our Telegram group, because we also share some alphas there, and we are like always like accessible. So if you send like a message, I could be like answering anyone like from the team to any of the other co-founders. So we are like pretty active. And then we also have like Discord that you can check out.
Awesome. Yeah, I'll get all those linked down below too for people that are interested in checking them out. And I'll also have a couple videos linked too that you can check out some of the mechanisms and the lending, the borrowing, the obviously if you want to mint USH, the entire process has been laid out, and also some of the security mechanisms that we've talked about in this video. I'll have all that linked down below for anyone that wants to learn more, because it's coming soon and it's going to be big, because it's so needed. Or I don't even want to say another, because it's the first over collateralized, decentralized stablecoin, correct?
It is actually. It will be like the first on MultiversX, native to MultiversX.
Yeah. So it's going to be big launch. And anything else you'd like to kind of finish up on, or any closing thoughts?
So yeah, what can I say? It's been like a really long period that we've been working on this product. A lot of efforts have been put by everyone in the team. So like people always see me actually like during like spaces, AMAs, and so on. But we are like a very big team of, I would say, like super smart people, and everyone has put a lot of efforts into like reaching the step that we are at. We did like a tons of analysis, seeing like the synergies that USH will have with the different like products and protocols on the chain. So it will have like a lot of good impact, increase like the volume of the different like dexes, aggregators, increase like the activity on chain, offer completely new yield opportunities for arbitragers. So yeah, like we're like super excited for the launch, and we believe that it could be. We see like one, if not like the biggest launch that we had like on MultiversX. We
For
can't
sure.
wait.
Yeah,
Actually,
I completely agree. I think the community's in the same boat too. I know everyone is super excited. So I really appreciate your time and to connect, chat more about USH and all the cool stuff you guys are building. Definitely go ahead and check out Hatom Labs, follow Ahmed, check out their website. Like I said, super cool. And get ready for the USH launch, which actually, by the time this drops, it might have just launched. So it's March 3rd, 2025. It's going to be big. So thanks for coming on again, and get ready for USH.
thank you for having me.